Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a long overdue follow-up interview. And man, I got a bonus today. I got Singhvi, the CFO of Volatus Aerospace, and I got the CEO, Glen Lynch of Volatus Aerospace. And I actually had the pleasure of meeting Glen in person here in Las Vegas last week and going to one of the shows, one of the conferences for the industry. It was pretty blown away by by your entire team, Glenn. And I think there was, what did you say, 9 people there? Was it about 9?
I think we had a dozen people, including me. And the good news is that's the group of people that actually get the job done. I get to take all the credit, but they're the ones that actually make it happen.
Spoken like a true leader, right? Abby, CFO, right? Or is it the controller?
I'm the CFO, yeah.
Both, but a bit of both. And how long have you been with them, Abby?
Since the beginning, actually. It's been a little over 3 years now.
Okay. And I asked you before we hopped on if you were having fun. Still.
Oh. Absolutely, yeah. Let me just put it this way. I don't get time to even think whether I'm having fun or not.
So, this is what, Glenn, the 3rd or 4th time that we've done an interview together. And look, It's been a brutal market for small caps and micro caps. I think everybody knows that. It is not stock specific in many, and for many reasons. It's more sector specific, right? For 26, 27 months now, we've been getting pounded pretty good. And unless this is the end of the world, which I guess I'm an optimist, I don't think it is. I think there are a lot of good companies, including Volatus Aerospace, that have been beaten down unfairly. Volatus has done a lot of things, acquisitions, 16 of them, I believe, right? Gotten into, you really diversified the core of the company substantially, right? Grown revenues and I think kept the balance sheet in check for the most part, right, Abby?
Correct.
So what hasn't happened is you haven't been rewarded at all. And that's not uncommon for any of the small microcap names right now, primarily because the capital markets are horrendous, right? And if there's even a hint that you need to raise capital, no one's going near you because they have no idea what that deal is going to look like at the end of the day, right? Rising interest rate environment. But here's what I see. You guys have gone through a pandemic, which I'm pretty sure we've never had before. This is the first one. We've gone through the worst supply chain issues, I think, in history. We've gone through the fastest interest rate hike cycle in history. And I would call that a fairly challenging business environment. Would you guys agree or no?
Oh, no question.
Yep.
And you've grown your business, right? Which was a very chopped up business to begin with, I think. A lot of small players, you kind of mentioned that before we hopped on, right? It's still a very fragmented business, but the opportunity for growth is massive. I mean, would you both agree with that?
Yeah, well, I think capital markets has definitely not had a good sense of humor. It's somewhat broken for the last couple of years, but honestly, Tim, this too shall pass. What we have to do as a business is stay focused on the business, get up every day and do what we do. We've had, as a group, we've gone through, as having a little bit of gray hair, double-digit inflation. We've gone through, 9/11. We've gone through energy shortages, biodiesel issues. We've had, you name it. We've gone through an awful lot as a people, but this too always passes. At the end of the day, we just have to get up every day and keep doing what we do. Focus on fundamentals. Markets are not rewarding high growth companies anymore at this moment. But the truth of the matter is, our original investors, that's why they got into us in the first place. So we have to balance out our drive to profitability with continued responsible and accretive growth. So it's just, I don't think it's an exact science. I do believe that, with hard times come unique opportunities. And I think that we just have to continue to work hard and seize those opportunities and be a little bit more cautious about how we do them as an industry and small caps in general, I'd say.
So let's talk about real quickly. You're going through kind of a consolidation of some of the subsidiaries, right? Which is a smart move in my view, right? How is that? What propelled that, and how is that coming along?
So, bearing in mind, a lot of M&A, a lot of companies that perform M&As, they have some real challenges keeping them sticking after the fact. The reality is when a company is acquired, the stakeholders, and I mean all the stakeholders, employees, customers, you name it, they don't know whether the new company is there to lead them or loot them. And it takes some time to actually develop the relationships internally, to have a natural migration of brand equity and so on. So with Volatus, we bought a large number of small companies over a period of time. And then we start out by literally allowing the companies to operate largely as they did before, with the same leadership, allow the relationships internally to build, allow everybody to have somewhat of a natural migration, brand migration, where the equity starts to migrate to the parent brand. And then there comes a point in time where everybody's comfortable and it's not damaging to the organizations to bring companies together to realize their synergies. So when you get too many individual companies, the beauty is by leaving them run independently, you try not to break them. But on the flip side of that, you don't really gain the synergies. Then you get to a certain point where everybody, the company starts to tell you it needs some consolidation, and those synergies become natural. For us, it was just a series of things happening at the same time. We've been working on the consolidation, kind of the streamlining of internal business processes, and the consolidation of some of our subsidiaries for the last, many months. And it just happened to fall at the tail end of the second quarter, where to be able to consolidate a lot of interest, we had to first consolidate minority shareholder activity, which we did on the 28th of August. And that allowed us to completely execute a plan that basically created about $3 million worth of synergies, reduced overheads, without impairing our ability to grow. And a key point here is it's not cost cutting for the sake of cost cutting. It's quite different than that. It's actually merging organizations together, getting them to function instead of 7 individual businesses. They're now 3 business units. And it restores a lot of agility to the organization. If you've got to work through, a bunch of CEOs is very different from working through a small number of business unit leaders. And so that's what we did. So it was an exciting time for us. A little disappointing that the markets didn't recognize it as much, but we had revenue growth, we had margin growth, and we announced $3 million in cost reduction initiatives through synergies. But nonetheless, regardless of whether the market recognized it or not, they were still the right thing to do at the right time.
And you're in an industry that I don't see slowing down in terms of growth. I just see lots of opportunity. I mean, lots of opportunity. It probably hasn't even been fully identified yet, right? I mean, I just think there are some things that we don't even know these drones are going to be used for, right?
It's accelerating. Industry adoption is accelerating based on use cases. Ukraine, certainly, as unfortunate as that conflict is for so many, such a tragedy. The truth is, on the flip side, as an industry, it really served to highlight and showcase the capabilities of drones, at least in one environment. Now, in our case, our drones are intelligence products. We're not a company that does anything weaponized, not because we're necessarily against it. It's just not our expertise. Our expertise is intelligence, whether that's crop intelligence or battlefield assessment. But
hotspotting, right?
Hotspotting, fire. Yeah, that's exactly right. We are looking for hotspots one way or another. On a battlefield, it's one type of hotspot. On a wildfire site, it's something completely different. But I think what you're going to see is that'll continue to accelerate. The technologies are coming along, as you saw in that hall in Las Vegas last week. There is some tremendous technologies that are being developed and commercialized. The challenge we have, and it's a challenge for some and an opportunity for others, is those companies are all early stage development, or many of them are early stage development companies that are having trouble accessing affordable financing. And as a result, it creates a brand new wave of opportunities for companies like Volatus to realize on really accretive, affordable acquisitions.
It's funny that you say that, because I've been waiting for mergers and acquisitions to pick up in a significant way, right? If you're having a tough time getting reasonable capital from the financial institutions, as opposed to taking the deal where you have to sell them your stock 30% below where it's already trading, which is down 70 to 90%, and then have to do anywhere from 100 to 200% warrant coverage. That is a deal that if you take that deal, I understand if you don't, you got to turn out the lights, maybe. I think if you do take that deal, you're going to turn out the lights probably anyway. Just you're going to lengthen that duration. You're never coming out of that horrible financing, right? So that's when you start looking for a real good dance partner.
Yep.
Maybe that is sitting on a good cash position, and the two of you make a stronger one than you do two separates, right? That's what I have been waiting for, because I think valuations in this space, and I'm not just talking, in the drone space, in the small cap space, there are some valuations that have just gotten down to being stupid. I don't know how else to say it. I mean, they're just dumb. And I don't think it can, I just don't see how it can sustain this way for much longer, right? So either we're going to see a pickup in mergers and acquisitions, or we're going to see one hell of a snapback in the markets at some point. I'm good with either. I imagine you'd probably like to to see some mergers and acquisitions first, Glenn, then the snapback.
Well, mergers and acquisitions for us will always be part of our world. They just become more challenging now. We become, we're obviously hypersensitive to the accretive nature of an acquisition, but then negotiating terms that are interesting are quite challenging, because you have to recognize that the stock is trading well below where it should be, and then ultimately convince the seller that it's still a good deal if we create valuations on the stocks that are higher than where they're traded right now. I mean, analyst coverage helps, but it's harder to get more analyst coverage, as you already pointed out. So it's, you're continuously presenting your case and working the file. I mean, again, the problem is, if it was easy, everybody would be doing it, and the cost of acquisitions would be higher. So
Right.
for us, I mean, our major focus right now is first of all continuing to increase our business organically, just through a strong sales force, expanding our contract business, expanding our market reaches in the businesses that we're serving. And then secondly, to not turn our back on particularly interesting M&A activities, because again, while they're more difficult deals to do and more difficult deals to finance, they're also priced at a level that they never will be again. So, again, we continue to do exactly what we've done since the beginning, and just focus on what's good for the business. I mean, no matter what happens, investors sometimes will agree with what we're doing or disagree, but it's like trying to run a government with public opinion. At the end of the day, we have to stay focused on what's best for the corporation. And if it's best for the corporation, eventually that's what should be best for the shareholders.
Abby, do you feel as though you're stronger today than you were when you first joined?
Oh, absolutely. Absolutely, Tim. So to add on a couple of points which Glenn just mentioned, when the capital markets are bad, they're bad for everyone. And that actually makes M&A more cheaper. Like, of course, if we are financing a M&A using debt, debt is expensive, but the overall acquisition price comes down. I'll give you an example. Before the capital markets lost the sense of humor, so were broken, what happened was the average EV to rev multiple we were paying was 0.55x of the enterprise value of the target company. And most of the transactions we structured were 33% in cash, 33% in equity, and 33% in earnouts. Now what has happened is, one, the multiple has gone down, and at the same time, the structure has changed. Now we have removed the entire 33% of cash element. We either say it's 50% equity and 50% earnouts, or even larger portion in earnouts, because if the target company firmly believes they are going to hit a larger number, we link it to the earnouts, because at the end of the day, if they do meet their targets, it's win-win for the target company's ex-management and the founders, and for Volatus, because it's together, it's only making the company grow larger and stronger.
Are you excited, Glenn? Are you still having fun? I know Abby's having fun, but are you still having fun?
Yeah, I got to tell you, I've never worked as hard as I work currently, but that's largely because there's never been such an exciting environment to do business. I must admit, it's frustrating, of course, seeing people that are not satisfied with stock performance. But we can't get too caught up on that, because there's only so much we can do about it. What we know that eventually the performance of the company will be recognized. And the big thing for us right now is the size of the opportunities we're pursuing are considerably different than where they were just a couple of years back. So, I mean, I tend to be somebody that wakes up before my alarm clock, usually because I'm excited to get my day started.
So we've tried to identify the TAM before, right? And I think that is an extremely challenging thing to do for this particular industry, because I don't know what the TAM is. I don't know how many opportunities there are out there. I mean, we were talking about debt on plastic in the ocean, right? I mean, there's so many opportunities out there to collect data in a very efficient manner using these drones, that data, as far as I know, has become the number one commodity in the world, surpassing oil, right? And you guys are kind of like sitting in the catbird seat, right, of this whole thing, right?
Well, we're a little bit in both. You mentioned oil. We're actually in oil and gas and data.
Yeah, no, oh. So
For a segue.
you just announced, what was it, last week or Friday, your expansion into, can you tell us exactly what that meant?
Yeah, super excited about that. So we announced our first U.S. oil and gas pipeline contract. Now, it's not our first oil and gas contract. In fact, we're very, very substantial in pipeline surveillance activities in Canada using helicopters, piloted aircraft, and drones as well. We actually cover most of Canada from basically Kitimat in British Columbia all the way to the nation's capital in Ottawa. But we actually announced our first U.S. Contract. And what's really interesting for us is the U.S., to give you an idea, the U.S. Pipeline infrastructure is about 2.5 million miles. Canada is about 500,000 miles. So if I use our market penetration in Canada, assuming that our competitive advantages in Canada will give us the same competitive edge in the US. And right now, the type of services that we do, we compete with US companies in Canada, and we'll compete with, they'll compete with us in the US. But basically, that would put our total obtainable market at about 60 million. So, and we've got some things that we feel make us quite unique. Our data management system, which is really, it manages up to about a terabyte of data per day for oil and gas, and then helps with the identification, classification of issues, and then the automated reporting that goes with that. And that's really migrating into, I would say, early stage AI activities, which will be next. I'm really careful not to use that AI word too much because it's a spectrum, right? And we're at the beginning of that spectrum. But our ability to step into legacy means using, in other words, we can provide surveillance the same way they always have, using aircraft and helicopters, piloted aircraft and helicopters, but also replacing visual observers with advanced sensors and data management capabilities, and then eventually replacing the pilot with remotely piloted aircraft. So the beauty of drones is it starts to be an ESG win for our customers because they burn a fraction. Even if they're fuel powered engines, they burn a fraction of the fuel that helicopters and aircraft do. They have a small footprint. They're less disruptive to wildlife. If they do have an incident, you're losing a small piece of equipment rather than a large aircraft with people on board. So a lot of wins happen in that space. And Volatus is a big player in the traditional space, but we're a major disruptor. Our objective is to use our strength in the remotely piloted technologies to disrupt, ultimately augment, and eventually replace piloted aircraft and helicopters. And I want you, for anybody that's traveled, and if anybody that was in Denver last week probably had a fun time getting out of Denver, because between weather on the East Coast and pilot shortages, delays are commonplace now. Well, pilots, nobody thinks about the ecosystem of pilots, but the airlines are drafting all the pilots out of the smaller operations such as pipeline. So this critical monitoring of infrastructure is going to become more and more difficult over time as there's less and less pilots available to fly these piloted aircraft, which again is where remotely piloted aircraft become valuable. The training, because of the level of autonomy and automation, the training cycle is shorter. But the other thing is, we're expecting an industry which is today a one drone to one operator relationship for the most part, to move to a many to one, which means that a single operator could oversee the operation of numerous remotely piloted aircraft systems. So the human becomes on the loop rather than in the loop, able to take control, but really monitoring the progress, which is going to be critically important as we have less and less pilots and a greater demand for infrastructure. just paralleling, if I can add, just take one more minute. If you look at that in energy utilities and or energy companies in general, we moved to electric utilities, right? We've got aging infrastructure, a big push towards electric vehicles and electric everything for that matter. And then ultimately, we've got climate change, which in places like Quebec, where I live right now, means less snow, which means less humidity in the soil in the spring, which means the better opportunity for fires. Add to that the fact that the world overall is what, a degree or a degree and a half warmer than it's ever been before, and we have the magic combination that is wildfire. So everything from using drones to inspect the critical infrastructure of distribution towers and transmission towers, right of way, making sure that we don't have vegetation encroachment, which ultimately gets bogged down with ice, falls over and damages electrical infrastructure, and then and so on and so on. I could keep going with that right into the wildfires, which is one of the biggest opportunities we see for remotely piloted technologies in the next couple of years.
How long have you been in the aviation industry, Glen?
Long time. Yeah. So, when I walked around that show last week, I realized how many years it had been. So about 43 years I've been in professional aviation.
So you've seen some change. Let me ask you a question. When you started Volatus, you and your team, how much has the vision changed in, what has it been, 3 years?
Yeah, 2019. The company shows 1987, but that's because of the various mergers and activities that we've done over the years. But the major vision has not changed. It was to realize the full potential and commercialize the full benefit of these remotely piloted aircraft systems. But I will say it's been a real learning journey, because you're learning with the rest of the world, right? It's nascent industry. We have a lot of brilliant people powering this industry, and anybody that says they understand it all is probably in the wrong spot, because there's an awful lot of evolution happening everywhere. And different things happen. Like, we didn't see ourselves as big in the defense sector as we became, but that's because we didn't forecast the impact of Ukraine. And then this year, forestry has been a big focus for us for the last couple of years. We saw the potential. It was in forest management, not in wildfire management. Now we're realizing that, because of the environmental changes and the impact on wildfires, that wildfires became the prime target. So a lot of education along the way, but the core vision hasn't changed at all.
I think what's interesting to me when I was talking to your team, one of the points that had been made was that, like, you had one customer that literally was like ready to basically said it was a done deal. The efficiencies that they were going to receive from this thing were like, I think it was maybe it was railroad industry, right? And they were ready to pull the trigger, and then all of a sudden, just like disappeared. I don't know if that's because of red tape or because people get maybe frightened by the efficiencies, become too efficient. You need less people, right? I guess possibly.
Well, there's a number of things that come into play, and it depends on the individual companies. It's everything from, you can have a change of leadership and they want to reassess where they're going. You can have, union issues internally that have to be managed carefully as you introduce. When you talk about remotely piloted technologies, a lot of people view that as removing jobs, as opposed to replacing jobs with, more technically advanced or a different type of job. And the other thing is recognizing that we're largely not replacing human beings, but we are filling a need where human beings are in short supply, such as pilots, for example. So those can be issues that affect them. Sometimes it's just technical issues that develop, and sometimes it's just timing, right? You get to the end of a season and all of a sudden they're faced with winter, or they're faced with major issues. Honestly, Tim, I don't think a lot of companies were prepared for the impact of the wildfires this year. And by the way, I include myself in that. Abby and I attended an investor conference in the mountains earlier this year, And I was saying to my wife, this is a place I'd like to retire. 2 months later, the entire place was burned down. Right? You never saw that coming. So a lot of companies have to adapt quickly. You mentioned railways have a lot to do during fire season because some of the causal factors actually have to do with industrial applications, right? Industrial activities can be the trigger for fires, and a lot of these, organizations like railways, particular, they're very responsible organizations that when something starts to develop, they actually immediately adapt to the environment and start saying, okay, what do we need to do? Like with railways and brake fires, we've had people that will actually use drones to fly up and down the tracks looking for problems that may have been caused by sparks from equipment that are moving, and they're very very I want to say it's been an impressive journey to see these companies respond the way they do, but it can also take a project that you were exploring with them and put it to a back seat for 6 months while they deal with some immediate issue that's going on. And remember, every one of these large companies and small companies alike are dealing with the reality of capital markets. Some of their expansion programs and technology programs may in fact need to be clipped for a short while they kind of reassess the impact internally. So a lot of things to consider. I don't think there's any one thing. Railway continues to be a major area of growth, not just for Volatus. It's a big focus for Volatus. But if you look at organizations, other publicly traded companies like Ondas, for example, where that's a focus for them, they're actually making some good inroads in that space. And I don't hesitate to mention them because it's a big space with lots of room for all of us. But that's how I see it. I don't think any of those opportunities actually go away. They ebb and flow with just general business.
Abby, how do you feel about the remainder of this year and how you're positioned heading into next year?
So I'll start with the later question because it's if I compare Volatus, if I look Volatus with any other company out in the market, there's a significant difference in what we are doing and how we are doing. Today we have a horizontally integrated business model. What we have done is actually adopted, I would say, HubSpot or Amazon flywheel concept that once we hook a customer within the Volatus environment, we make sure they go through every segment of the drone space, be it buying equipments, training, services, or custom technologies. Because that's how at the end of the day, that's how a customer evolves over the period of time. They start with buying the equipment, then they say, oh, we need trainings, then they say, we want to outsource the whole business of services to you guys, and then say existing equipments or technologies that are not helping us, can you design a custom technology that solves a problem? That actually expands our overall business, the revenue and the confidence and the trust with the customer. And at the same time, it expands the margins because equipment is a much smaller gross margin rather than comparing to custom technologies and services. So if you ask me how it looks tomorrow, I think the business is expanding, use cases are going up, and as the industry is maturing, it's the customers are migrating into more attractive and premium margin business segments, which we want them to focus on because one, for them, it's drone is a distraction. If it's an oil and gas company, we don't want them to do drone activities or expertise we have. We want them to focus on the oil and gas activities and let us focus on ensuring the safety of their critical infrastructure. And that's just one example. And when I compare with the other companies in the market, that's not how the competition is today. Competition is either focused on technologies where they say our technology is the best technology and they keep pushing the technologies to the customer, which is not the truth because drone industry today, every I would say 24 to 36 months, it evolves and there's a new and better technology in the market. So anyone trying to push their own technology, after 2 years, they'll again have to play the catch-up game and develop a better technology. And we are not in that rat race today. We are not dependent on one technology. We are more tech agnostic. And any companies which are focused on only services or only equipment, they're again restricting themselves and their sales force because now they cannot expand their total market as we have done. And that's the reason we have today we have grown from $16 million to $40 million in the span of 2 years. None of the other drone companies are able to do it. Rather than having that level of significant growth, they don't have that level of significant revenue compared to us. So I think that's something that significantly differentiates us. We have been building moat as we move forward, that we have entry regulations play an entry barrier role, but at the same time our technologies, our softwares play an exit barrier, and the data is a key part, like it's a key assets which none of the other companies see. As it will play a big role, but we are betting big on data as well. So I know long answer, but I think that's how I would sum up.
No, I think it was a very comprehensive answer. So, one thing that I think has resonated, or I have identified with just about everybody in the company, and you've done, I think, a good job of driving this from the top down, Glenn, is you like to solve customers' problems. Provide solutions to a customer's problem, right? Which then builds trust, and then it builds longer term relationship, right? In a very young industry.
Customer stickiness is everything for us. Because if you look at it, we've got recurring business and we have repeat business, right? There's nothing new about the math. It takes 80% more effort to get a new customer and 20% effort to retain an existing customer. But if you look at our space, and again, I just touch on oil and gas for a minute, we're well established with oil and gas on their upstream and midstream infrastructure. So now it becomes much easier for us to use those relationships to introduce technologies that can look after refineries and remote facility inspections, and even deal with offshore platforms and deep water assets, right? If we think of UAVs, we're thinking remotely operated aircraft, but there's also ROVs, which are remotely operated marine vehicles that are inspecting deep water assets. And truthfully, from a company standpoint like Volatus, it makes very little difference. So the concept is to create the stickiness with the customers and then feed more value into that relationship.
Nautilus. Still on track for Nautilus? Is that
So we stopped talking a lot about freight because it drags us too much into the discussions on drone delivery activities, which is not really where we are. Cargo, however, is definitely where we will be, and it's the industry that I come out of after, certified airplanes have been delivering cargo across the country forever. What's happening now is Nautilus is a company that a strategic partner for Volatus. We're actually their very first confirmed customer, and now they've got well over $6 billion worth of expressions of interest, and they've got a large order from a U.S. air carrier that's also stepping into the remotely piloted aircraft. So it's still on track. $280 billion segment in the middle mile cargo, basically delivering between airports, larger airports. And for us, Nautilus is scheduled to enter service sometime late 26 or early 27.
Let's talk about the stock chart. It's not going to be a pleasant conversation, but it isn't really a pleasant conversation with anybody right now. So I guess my first question to you guys would be, A, do you have an open window for you to be able to participate in the open markets right now, or are you blacked out? And B, is anyone doing anything in the open markets in terms of acquiring stock?
Abby, do you want to take that one?
Yeah. Tim, first one is the management is blacked out because of so many things going at the same time. So that's how it is, unfortunately.
A lot of times people forget that, right? They think that you guys can go out and just buy stock anytime you want. It doesn't work that way, right? You have blackout periods where you literally are handcuffed from being able to go out into the market and buy stock.
We have an IR partner in Canada that one time at a convention, he asked me, or at an investor conference, he asked me, he said, "What is it that keeps you up at night?" And I knew the answer that he wanted. He wanted me to answer, it's our ability to continue to deliver on our customers' expectations. But if I'm completely honest, what keeps me up at night is the current stock value and the fact that I can't participate and buy up the liquidity that's there. Because trading where it is right now is such a bargain that I think we would have a lot more. Certainly, in my case, I'd love the opportunity to acquire stock at this level. We just simply can't. The company would have to stop moving forward long enough for us to be out of a blackout period to be able to do something. So, that's a personal thing, but it is how I feel. Sorry, Abby, I cut you off.
No, no, that's fine, Glenn. And that's how everyone feels in the management itself. That's why whenever in the past we had financing, we have always seen a participation from the management in that financing, because then it gives us everyone an equal opportunity to participate in and double down on the investment and the position we have. On the later question is, we have a few IR partners who are working and who are both institutional family officers and high net worth individuals. They have been talking to them. They've been trying to get a lot of attraction on the stock, so that, and at the end of the day, the intent is get organic bids on the stock, so that one, it impacts the trading volume, and at the same time also creates some momentum on the stock price. Because today, if we as you rightly said, tremendous pressure, under pressure right now, and it's not just us. It's unfortunately it's the entire small cap segment. But at the end of the day, like Glenn and I are focused on executing from within, and at the same time making sure our IR folks creates that awareness among the market, so that it creates some more organic growth and demand from the external side as well.
So if someone's new to the story, what do you think they should be paying close attention to? I mean, this is I guess here's the way I feel about it. It's a very young industry. Glenn, I think you're one of the most polished, and Abby, I think you guys are straight shooters. I think you're very polished, and you have the vision, and you're executing the strategy to achieve growth and success, right? We are going through a weird time in the markets right now, but like I said, I don't think that we've even come close to identifying all the opportunities that are going to be in this industry, right? And what's your risk reward here at this level, right? I mean, I don't think you guys are going out of business, right?
So my wife asked me why I got into this in the first place, early on. She's asked me that when she sees me on the road as much as I am, she oftentimes asks me what it is that keeps me fired up. And I'll tell you what it is. First of all, we're at a very unique place in time. I've been in commercial aviation my entire life. Making profits in commercial aviation is extremely challenging. You're struggling to improve your margins by 1/10 of a percentage point because your competition and industry are largely mature. This is a nascent industry. We have a very, very diversified customer base. I mean, I can't say where we are right now, but I can quote a number from last year. There wasn't a single customer inside of Volatus Aerospace that represented more than 5% of our total revenues. So a very diversified revenue base, distributed by sectors. Many sectors are accelerating like crazy. As a company, we're maturing. As an industry, we're maturing, although there's a long way to go before I would call it a mature industry. And because of the nascent phase that we're in, the opportunities are limitless. You mentioned earlier about total available market and how difficult it is to identify that. Well, we read all of the reports that are out there, and largely they write them. You've got to figure out what it is that they're writing about, because we can talk about how big the market is, but who knows? Because you're talking about people and industries that are coming up with new ways to use these technologies. And everything from, as simple as volumetric measurements in places that charge for aggregates, or even snow storage. You're dumping snow on a property and you're measuring how much snow is being dumped, to actually doing research and magnetometry type work and exploration, it never stops. And frankly, it's almost impossible to put a total available market on it, because we can pick out the aviation market and realize that drones are supplementing and will ultimately replace piloted aircraft in a lot of sectors in that industry. That's going to happen over years, but nonetheless, it's already starting to happen. But we're also finding new ways of using these technologies. I'll use an example. Major cosmetic company, global brand, they've started using drones in their warehouses to conduct their physical inventory counts. Because you can program a drone to fly patterns inside of these facilities. And with again, early stage AI, it's not a powerful problem to jump to be able to go through and identify the quality of the counts that are going on there. So that's inside, inspecting culverts, using it for public safety. I mean, Volatus has some really interesting technologies that are coming down the pipe that will allow us to take a drone, fly up to the side of a building and stick the drone on the side of the building, not because we're operating it as a drone, but the minute that the drone can actually hang on the side of a building, we can now run cameras for hours instead of for a half an hour, because the consumption of the engines keeping it in flight are less. Who would have thought of that application, a few years ago? But imagine the applications in security, where you've got heads of state coming and you have to clear an auto route, and there isn't enough closed circuit TVs. We can put them in the air, attach them to buildings in minutes. These would be the public safety organizations. We have technologies. One of the ones you may have seen on our booth, Tim, search and rescue. Somebody gets, we have people, especially if I look at, older folks that will wander off from their retirement homes, that are maybe facing some challenges that they can get confused and they get lost in the middle of nowhere, or even, but if they've got their cell phone on them, we have technologies that the search and rescue and public safety folks can put on a drone and identify their cell phone. And you're talking about, technologies that are not prohibitively expensive, and they're there today. It just never stops. You can pick an industry, and I can tell you what's going on in drones. We talk about environmental ESG and crop protection. We have the ability to go out and measure the density of pest infestation, and then dispatch a drone that's capable of spraying not necessarily the thousands of acres that might represent a large volume, low value crop, but rather the 100 acres that are infected to a level that it's endangering the crop beyond the stress tolerance of the plant. So significantly less chemicals are applied, smaller area, more affordable for the farmers, and these technologies may even affect how they insure their crops going forward. And of course, food production is a big issue for us as a people globally. So again, I could talk about this forever, but it never stops. So I believe that there's risk in the industry. The only real risk I think for investors to truly look at is I think it's time to have some fear of missing out, because it's happening. This industry is moving forward. I mean, that you walk around our trade show and you see a lot of extraordinary technology that's being commercialized now. This isn't Jetson stuff. The future's today.
Well, I wholeheartedly agree. I think the tech just continues to get better and better. The optics continue to get better and better. The industry is just what it is. It's a small industry right now. Abby, how many shares do you have outstanding, fully diluted for Volatus?
How many? You mean how many contracts?
No, how many shares fully diluted was the question.
How many shares fully diluted? A good question. I never counted, but I would say approximately 1.6, 1.7 million shares.
Oh,
I think he's talking about overall as a company, Abby. I think we're
for the entire company. How many shares do you have outstanding?
Okay, I thought you were asking mine. Okay. Company fully diluted has approximately 140 million total shares.
How many?
140 million.
140. Okay, so 140, in my view, is still. I don't consider that overly bloated in share count, right? I think that's a very manageable number. When you start to get up into a billion, that's a problem, right? In my view, right? Um, it's thinly traded. What's your average volume traded per day?
Before, I would say a few months back, it was approximately 70,000-80,000 shares a day, and now I think it has gone down to almost 25,000-30,000 shares a day.
So it's a tough balancing act, Glenn. You mentioned it earlier. You got to get to this place where you don't appear to be having to go to the capital markets, and at the same time, you got to manage the growth, right? I mean, so this is a tough environment, and it's such an exciting industry. Federal regulations, all that kind of stuff. Is that a hamper on you as well?
We think it's a competitive advantage. Because we operate both piloted aircraft and remotely piloted aircraft, we understand the regulatory environment well, and we've been able to bridge a lot of the regulatory barriers on the remotely piloted aircraft by building safety cases. I think the key point you just brought up, Tim, that I'd like to tag on for a second is the issue of our liquidity and the shares that are trading. The truth of the matter is, we have a belief right now that the only thing that's going to matter to the investment community is going to be sustained profitability. A business that's going to be able to demonstrate that it achieves profit and that it can maintain profit. The challenge you have to overcome a liquidity problem, you need to spend an awful lot of money in investor relations, right? And right now, we've gone through a period of time where we've measured that very closely and determined that while we need to continue to communicate with our investors, putting a lot of money into IR promoting the stock is not going to generate any benefit. You look at last week, in the last few weeks, we've announced financial growth in revenues, in margins, cost reductions, new contracts, meaningful contracts. And we're a company that executes, right? Like, it's not pie in the sky. People have watched us execute quarter over quarter. And the stock price basically hovers at where it was. I think it's sitting still around, in Canadian, about 22 cents. I think we're 15 or 16 cents US. But the truth of the matter is, I believe there will come a time that we have to step on the gas on an IR front, but we have to balance that expenditure with the need to maintain profitability. And I watch our peers closely because there are others that do a better job of marketing their story than we do to capital markets. I think that's one that we'll continue to watch, continue to try and do better. We're going to treat our nickels like a manhole cover when it comes to IR investments. But I believe that the time to really step on the gas is going to be as we demonstrate profitability, and we're getting closer and closer to that. It's a part of our everyday decision making, to make sure that we do continue to grow, but that growth is responsible, and that we continue to synergize to the greatest degree possible to achieve that sustainable profitability.
Do you have a target for when you want to achieve that profitability? Is there a time frame?
I'm an extremely impatient man, Tim. I have the attention span of a gnat. Abby will tell you I usually dig in pretty hard on these things, and we launched an initiative earlier this year. It took us several months to put all of the pieces in place, but over a 3-month period, we reduced our expenses by about $3 million. So while we continued to grow our revenues. So Abby might want to add a little bit more color to that based on the information that we've released publicly. But I can tell you it's a profitability is top of the list in terms of priorities right now.
Yeah, I would say, Tim, within the next few quarters, we'll hit the profitability mark, and then our objective is to have that profitability on a sustainable basis, because we understand once we hit that mark, there's no going back into negative. We won't have then. So we want to be very critical that it has to be an inflection point that we balance scale and profitability, and we hit at that exact moment of time.
And I think that's an admirable goal. I think since meeting you guys in the whole team, Glenn, it was a big help for me, because I think I might have been a little hampered about thinking that you were more of a hardware play than an actual software or service play. but you really are just a broad based. I mean, if somebody can't do the job, I think there was one project that you guys had. I think 2 or 3 companies that failed. You guys came in and did the job, satisfied the customer, right? It,
So that's the advantage of not being impaired by a commitment to a technology, right? It's by being technology agnostic, our objective is to solve problems, generate revenue, and create stickiness. The technologies are definitely there. I think over time, it will also become cost effective for us to acquire key technologies as it becomes clear that the market demand for those technologies is sustainable. I believe our technology agnostic posture is one of the things that makes us succeed. And I'll also say that the idea of being able to sell equipment to people that want to run their own programs, provide them with training, or provide the services. Well, services is ultimately where we believe the long-term potential for us lives. To be a successful drone company today, you have to recognize that it's largely still a small industry. And there are people out there, there's engineering firms that need to try and operate their own drone programs to determine if that's right for them or if it's better to outsource to companies like ours. My point is that we'll follow that customer through their life cycle and ultimately solve their needs. And if their need is selecting the right hardware, payload integrations, and training them, I would prefer to be the one that gets a little bit of revenue out of that. And then ultimately, I'm also the company that they'll lean on when they decide to expand because they don't have sufficient resources, update their equipment, or eventually decide, as many larger corporations do, to outsource their drone program and their aviation program in general to companies like ours. So that's kind of the roadmap, but it's the technology agnostic part. If somebody loves a tech company, well, we are largely referred to as a tech company, except we're technology agnostic, right? We do have our own technologies. We don't advertise those as being the prime mission because otherwise we're measured by how many of those that we sell. I want to be measured by the fiscal success of the organization and by our ability to attract and retain long-term customers. That's kind of how I see that.
all right, listen, I know I've taken up a lot of you guys' time. This is gonna be a long interview. I'm gonna edit it and get it out, but it's been so long since we talked, Glenn, that I really wanted to kind of give everybody a feeling. Volatus Aerospace is not going anywhere. They're the business is growing. You guys are excited, and you have an amazing team. I mean, across the board, Luke, just the whole team I thought was extremely impressive, and I have a much better understanding of what it is Volatus's goal is, right? And I think you're going to be around for a long, long time.
I'm really glad you had the opportunity to meet the team last week, and to some degree, I felt bad that I was torn in so many directions. On the flip side, I was glad that you had the opportunity to basically interact with them one-on-one and hear it directly from the team members themselves. They're an impressive group, and frankly, I feel extraordinarily privileged to be able to work with them.
Yes, no, it was absolutely fantastic to meet the whole team, and I'm looking forward to you don't forget, you did mention I can't flying around somewhere, me and you flying around somewhere.
Absolutely.
All right, listen, let's not wait too long the next time, Glenn, right? Let's what do you see as the next potential catalyst in the next 6 to 12 months?
We've got some news. You know what? I think it's going to be based on the news flow, Tim, and I think it'll be sooner than later. So I'm guessing another 4 to 6 weeks should be the maximum that we allow our time to go before we get an update. I apologize for being so difficult to nail down for this, but it's been a busy time for us. And, knowing you as a shareholder, we want to make sure we're representing your interests, which means doing the best we can for the company.
No, we get it. I get it. I'm a very patient man, Glenn.
Yeah. Well, I'm impatient, so we make a good fit. Opposite trap. There we go.
All right, gentlemen, thank you so much for taking the time. I'm going to cut this off here, but next 4 to 6 weeks, maybe we'll no, not maybe. We will be doing a follow-up, okay? Thanks. VLTTF is the ticker symbol, and hell of a team. All right, hold on 1 second, guys. I'm gonna turn this off for 1 second. Thank you for tuning in to today's interview with Volatus Aerospace, ticker symbol VLTTF. Today we had Glen Lynch, CEO, and Singhvi, CFO. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.